Good morning. This is Japanese Economic Review Channel. Let's look back at yesterday's dramatic turn of events. On April 10, 2026, the Nikkei 225 surged by over 1,028 points, a headline-grabbing performance that initially suggested a massive bull run. However, our analysis shows a narrow market breadth. While specific sectors soared on geopolitical shifts, the broader market reality was far more complex. Yesterday's primary driver was a sudden de-escalation in the Middle East. News that Israel and Lebanon initiated peace talks acted as a major catalyst. This eased fears of a retaliatory blockade of the Strait of Hormuz, causing crude oil prices to cool. Consequently, the global risk premium dropped, restoring investor appetite and fueling the significant pivot back into equities we witnessed throughout the day. The rally in Tokyo followed a strong lead from Wall Street on April 9th. The NY Dow hit a one-month high as oil prices stabilized, with gains led by giants like Amazon and Caterpillar. Crucially, the SOX index hit consecutive record highs, with massive demand for semiconductor leaders like Intel and AMD. This tech-led momentum provided the perfect setup for yesterday's high-energy session in Japan. Driven by these global tailwinds, the Nikkei 225 closed yesterday at 56,924.11, even briefly touching the 57,012 mark for the first time in a month. Liquidity was exceptionally high, with trading value reaching 8.73 trillion Japanese yen. In the currency markets, the yen weakened slightly to 159.34 against the dollar, providing additional support for large-cap exporters. However, yesterday's 1,000-point gain was an illusion for many. While the Nikkei soared, the Topix actually fell by 1 point, and 66% of prime market stocks declined. The rally was extremely top-heavy, driven primarily by a narrow rotation into AI and semiconductor stocks, alongside a sharp rise in fast retailing following its upward earnings revision. Sector performance yesterday revealed a stark divide. Non-ferrous metals like Furukawa Electric and Fujikura soared due to intense data center demand. Conversely, the drop in oil prices hit the mining sector and INPEX hard. Capital rotated strictly into high-growth AI winners, while defensive sectors like pharma and info-telecom showed broad weakness. In the growth market, easing geopolitical risks sparked a space venture rally yesterday. Axel Space Holdings hit its limit up, with strong gains for PowerX and Terra Drone. However, this was balanced by a sell-off in legacy tech and cybersecurity firms like FFRI Security, as investors rotated out of older IT themes in favor of next-generation hardware. Individual corporate news yesterday highlighted several innovation trends. NEG's ultra-thin glass was adopted for Motorola's newest foldable phone, and Takachiho Kohiki signed a landmark AI security deal. We also saw lifestyle innovation with Aoyama Trading's zero-gravity backpack and Unicharm's cooling masks, proving that demand remains robust for products that adapt to climate and lifestyle changes. In summary, April 10th was not a rising tide for all Japanese equities. It was a selective, tech-dependent rotation. While geopolitical relief provided the spark, capital flowed almost exclusively into AI and semiconductor trades. To navigate this environment, investors must look past the Nikkei's headline gains and recognize the ongoing structural shift toward high-growth technology. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.